Most people today that are going on Medicare supplemental plans are going with a Plan G. Well, what's the reason for that? And in this video, I'm going to answer 4 questions that will show you why. So the first question is, what are the Medicare gaps and why do gaps exist? And so as we approach the answer to the question, we know that Medicare is broken up into 2 parts. Part A is called hospital or the inpatient services, skilled nursing care, as well as hospice. On the B part of Medicare, this is going to be everything that's on the outpatient side of Medicare, including all doctor services as well as durable medical equipment. So these are the things that A and B are going to cover. And so what we have in the coverage is we have some gaps. The only thing that Medicare covers 100% would be preventive type services, immunizations, things like that, and wellness type visits. But other than that, there's always going to be some kind of a gap, some kind of a financial responsibility that the Medicare recipient is going to have to bear. And so there are actually 3 gaps on the A and there's 3 gaps on the B. And so we begin Medicare Part A. This means that we've been put in the hospital, and our gap for this, the first gap, is what we call the A deductible. Now this year, 2023, that deductible is $1,600. And that deductible is our full out-of-pocket expense for up to, notice, a 60-day stay. So days 1 to 60, that's all I pay is my deductible, and Medicare pays the rest. The bill could be, $50,000. It could be $500,000. It doesn't matter. That's all we spend out of pocket for the first 60 days in the hospital. And that's going to cover probably 99% of every situation. But when someone's really ill and they're in the hospital longer than 60 continuous days, then what we do is we get into our second gap, which we call extended hospital stays. So this is month 3. We actually have an out-of-pocket expense of $400 a day copay. That's month 3 when that happens. And days 91 to 150, which would be month 4 and month 5, they double the copay, and now it would cost me $800 a day copay to be in the hospital. Again, these are rare, but that's how they're billed when they occur. And then that's the second gap. There are a third gap on this side is for skilled nursing facilities. So here's the way it works. Medicare says days 1 to days 20 cost you $0. As long as we've had a 3-day stay in the hospital, Medicare covers all the skilled nursing expenses for the first 20 days. After that, days 21 to 100 would cost me $200 a day copay. $200 a day. So those are our 3 gaps on the Medicare A side. The B side, again, everything outpatient, doctor services. Again, we have a deductible, and this deductible this year is $226 on the B side. Now, the difference between these 2 deductibles is this one can occur more than once in a year. This one is just once a calendar year. That's it. All right, so once we've met that deductible once a year, then we go into Medicare's coverage on the B side of 80-20. Medicare is going to pay 80%, and you, the recipient, are responsible for 20%. We call that 20% co-insurance. So if Medicare covers the service, anything on the B side, they're going to take care of 80% of the bill, you pay 20%. And then the last gap is what we call an excess charge. Now, excess charges are not real common. They're pretty rare, but they do happen. But this is when a doctor sees a Medicare patient but does not accept Medicare reimbursement rates as payment in full. And that means that they can add to the bill. So when a doc adds to the bill, the most they can add is 15%. And when they add the 15%, the Medicare recipient is responsible to pay for it, meaning Medicare allows the charge to occur, but Medicare doesn't cover any of that. All right, so my whole point of sharing this grid with you is that we have 3 gaps on the A, and we also have 3 gaps then on the B side of Medicare. All right, and so those are the gaps. And this just simply means that we're financially responsible for these. The original Medicare system really is a good system, pays decently, but with all these financial liabilities, most people would be uncomfortable with that. So what we have the opportunity then to get a Medigap policy. A Medigap policy. So this is a policy that's going to fill in the gaps either fully or almost in full. All right, and so let's talk about then, what does the Plan G cover? Again, this is the topic of today's video. This is the #1 plan throughout the country. It's the most popular plan. And so what is it going to cover? In other words, what gaps is it going to cover? So here's what it does. It's going to cover the $1,600 deductible. If that happens more than once in a year, it's going to cover it every single time. If I happen to have an extended hospital stay, it's going to cover the copays that I'm responsible for month 3 and 4 and month 5. Plus, it's going to give me a full another 365 days in the hospital at zero cost to me. And then on the skilled nursing side, remember this is after a hip replacement or a stroke or an accident or injury where we go to a fairly intensive rehab in a skilled nursing facility. These days, 21 to 100, it's going to cover my daily copay. And right now the average stay is about 35 days in skilled nursing. So most people are paying an extra 15 days to be in skilled nursing facilities. So what's going to happen? That G plan is going to cover all of these gaps. You would have zero out of pocket when it comes to the A side of Medicare. On the B side, again, we have the deductible once a year, 20% coinsurance, the possibility of 15% excess. So here's what happens on that G plan. It will cover your 20% coinsurance, all of it, and it will cover every time you have an excess charge. If and when that occurs, it is covered by the G plan. So as you can see, the only item the G plan will not cover is your annual B deductible, which simply means the first $226 of anything that's billed outpatient basis, lab work, MRIs, CAT scan, outpatient surgery, all the doctors that you go to see. Could be a primary care doctor, could be a specialist, could be a doctor that actually comes to see you in the hospital, a hospitalist, an ER doctor, a surgeon, an anesthesiologist. The first $226, which isn't much, is going to be out of your pocket. Then everything else is covered. So I tell people this, the G plan is almost 100% coverage other than the once a year B deductible. So as long as Medicare pays first, that G plan will fill in every single gap. All right, and that's why most people really like the G plan. Great coverage.
Hey, just real quickly, if you're finding this video to be helpful, you can like, comment, and subscribe. And if you do so, that'll let YouTube know that this is helpful information and they'll send it out to others who also need to learn about Medicare.
Now, the last thing I want to mention as we talk about the coverage of the Plan G, number one, any provider that takes Medicare is going to be covered. In other words, you never have to worry about does your provider take your supplemental plan because supplemental plans do not have any network. There's no HMOs or PPOs. That's in the Medicare Advantage system, but not here because any provider that takes Medicare will absolutely take your supplemental plan. You don't even have to ask them. In other words, if that provider takes A and B, they are going to take your G plan, no questions asked whatsoever. Okay, that's simply the secondary payer, and that's it. Secondly, what happens, they're going to cover anything that Medicare says should be paid. Okay, which means this, any Medicare provider is covered, but also any kind of service that Medicare says is covered by Medicare will be covered by your supplemental plan. So you never have to worry about any kind of a Plan G interference. In other words, that insurance company cannot interfere in any way. They have no say-so whatsoever. So if Medicare pays, they absolutely have to pay, which means what? We're just saying in this system of a G plan, we have no pre-authorizations. No pre-authorizations. Okay, a pre-authorization means that's when an insurance company is able to give the final verdict on whether you're going to get that knee replacement or hip replacement or that MRI, CAT scan, or that skilled nursing stay. And so in this system here of G plans, there's no pre-auth whatsoever. If Medicare says they'll cover it, doctor says you need it, end of story, that G plan absolutely will cover it with no say-so whatsoever. Unlike the Advantage plans, where at about 70% of the time, the Advantage plan has the final say-so as the insurance company instead of your doctor and you. All right. And then lastly, the nice thing about this coverage is this coverage, folks, is permanent. Once you get a supplemental plan, it is yours for life. Guaranteed, renewable for life. So that means that you can never lose that coverage. As long as you pay the premium, it's yours. If you, let's say you live in Denver, Colorado, and you move to Dallas, Texas, you can take that supplemental plan G with you there. There's not going to be any difference in coverage whatsoever. It's a lifetime policy. And by the way, it doesn't matter if you live in Denver and you go on vacation in Miami and something happens in Miami, Florida, you pull out that red, white, and blue card and that supplemental G, it's going to be all the same because they're a nationwide program. All right. And so that's very good as well. So permanent for life. You never ever have to worry about losing it. That insurance company can't cancel because you have a lot of claims. They can't cancel because of your age. They can't cancel because of location. That policy is truly yours for life as long as you pay the premium. All right. So when we talk about the coverage, these are the wonderful benefits of that Plan G. All right. The third question, what does the Plan G cost? Now, folks, keep this in mind. We're a nationwide company. We write in all 50 states. All right. So I'm not going to be able to start telling you rates in every single state. So I just simply want to talk about averages. All right. Right now, the average Plan G throughout the country is going to be in the $125 a month range. And again, there's going to be some that will be a little bit lower, some that are going to be a little bit higher. Really, truly depends on where you live. Now, also, some companies give people what we call a household discount, and that means that somebody else in the home is getting a policy either from the same carrier, or at least they're Medicare eligible, or they're at least 60 years old. There's a variety of ways in which people get household discounts. Also, the carriers actually give you a discount when you pay through an EFT and a bank, ACH type of a bank draft. You ought to do that anyways to make sure you never miss a payment. Because what happens if someone is on a direct bill basis and they fail to pay their premium, they only have 30 days of grace to bring that policy current. And if for whatever reason they've moved or changed bank accounts and didn't update that information, that policy lapses after 30 days and it will not be reinstated unless you go through underwriting. And sometimes people's health has changed and they can't pass through underwriting, so they lost that wonderful supplemental plan. That's why you should always pay with the bank draft. So my point is this: once a rate is established, then it could be discounts because of multi-policy, could be discounted because paying through a bank draft. Now, when we look at premiums, folks, we look at initial premiums. That's important. But I just want you to know that the initial premium is not the end of the story. What really matters is the stability of the rates. And why is that? Well, because all rates are going to go up. Everything goes up because of medical inflation. And so what we prefer to do is we like to write with national companies. And the reason for that is anytime you get a supplemental plan, you want to go into what we call a large block, a large group of business. Why? Because if you go into a large block, what happens is the risk of healthcare costs in that block are spread out to more policyholders, and the result to you is going to be then stable rates. If you're in a smaller block, which would be a regional carrier, what happens if that has a lot of health problems? I guarantee you those rates are going to go through the roof. So we, again, like national carriers where they have a larger percentage of the business that's written in that market. No joke, we had somebody recently, it was interesting, there was one carrier in their market, it had 280 policyholders in the whole group. Another carrier in that same market had 33,000. Which one do you think would be the most stable? Clearly the one that was larger. And so what we care about is, yes, initial premium. I want that to be competitive. I want it to be attractive. But I also want to look at the history of that company to make sure they're stable, because some companies tend to raise prices more frequently and more drastically, and the result to you then would be unstable rates. Okay, and so we're going to have a monthly premium. Why? Because we've transferred all those gaps but the B deductible to that insurance company, and we're going to have to pay them a premium for them to take that liability from us. So that is going to be the cost, about $125 a month. Again, could be up higher, could be a little lower depending upon you where you are, but that's the range.
Hey, if you're finding this video helpful, I want to invite you to go right up here and actually click on a link that will allow you to watch what I call the Medicare Essentials Workshop. It's a workshop that I did that really is going to show you everything you need to know about Medicare from A to Z, how to enroll, when to enroll, and the plan options for you. So go to that link and check it out.
And then lastly, you must know about this called the OEP, which stands for Open Enrollment Period. And so the question is, what is the Medigap Open Enrollment Period? And it's probably one of the most important features really of any Medicare supplemental plan. And this is a period of time when you go through your Medigap Open Enrollment Period where you do not have to go through any underwriting, no health questions to be asked, they're not going to check medications. This is a period of time when if you apply for a Medicare supplemental plan, whatever is in your area, your state, whatever plan you want, whatever company you want, that insurance company will absolutely approve your application. They have to write that policy. We call that your guaranteed issue right. And this OEP period is actually very important because it's tied specifically to your B date. Okay, I'm shooting this video. Today is 8/7/2023. And let's say that somebody turned 65 today, which means their birthday was 8/7/1958. Okay, and that means let's say they went on Medicare right at 65. And so they were eligible for Medicare 8/1/2023. Okay, and so what happens is this date here, this would be their A date and their B date if they're starting at 65. And so what will happen is this open enrollment period is a 6-month window. 6 months is all this lasts. And so their 6 months, in my example of a B date of 8/1/2023, would be this. It'd be August, September, October, November, December, January. So we have all the way from August to January 31st, which means after February 1, 2024, forward in 46 of the 50 states, after February 1, 2024, if someone wanted to get that Plan G, they actually have to medically qualify to do that. But during this open enrollment period, these 6 months of the B date, there will be no health questions asked. all the pre-existing conditions that that person has to be covered and accepted by the insurance company. They cannot deny your MedSup application during that 6-month window. But after, in this example, February 1, 2024, if you did not have a Medicare supplemental plan and you wanted one, then in 46 states, you have to go through underwriting. Have to. They have the right to deny you. The 4 states where this is an exception is New York, Connecticut, Maine, and Massachusetts. They operate under some different rules that particular state allows. But otherwise, this is when we need to buy a MedSup plan within 6 months of the B date. Now let's suppose this. Let's suppose that someone decided that they were not going to start Medicare at 65. Why? Because they were working and their spouse were working and had a group plan that had 20 people or more, 20 or more employees. In that scenario, they did not have to take Medicare at 65. So let's suppose that they decided that all they were going to do was enroll in A only. And they had an 8/1/2023 date. And let's say they're going to work until the end of 2024, and they're going to start their Medicare January 1, 2025. And they selected their B date to be that date because they were covered by a group plan until the end of 2024. And by the way, when this happens, they come in using what is called an SEP enrollment. This is called a special enrollment period, and it brings them into Medicare B. We have 2 forms that we have to use, the L564 and the CMS 40B form. And we can absolutely bring them into Medicare with a B date of 1/1/2025. And that now is the date when this OEP 6-month window begins. So now they have all of January, February, March, April, May, June, and then anytime after July 1, 2025 in 46 states, now they have to medically qualify. So my whole point in teaching this is that 6 months is always tied to the B date. So it's a very important, critical date that you do not miss your Medigap open enrollment period, because this is the time when you can get any Medigap policy, any company, any letter that's available, and you can get that Plan G, no underwriting whatsoever.